Hi everyone, a very good afternoon to all of you present here. I'm Nitisha Jain, Assistant Manager of TaxPerry.com, and my area of expertise is income tax. Today, in this webinar, we are going to discuss a very interesting topic about taxation of capital gains. How you can plan your taxes if you are having capital gains. Now the major question arises that first of all, if you are I'm talking about layman who have not that much typical knowledge about the income tax terms. So for them, if we talk that what does capital gain, how does this tax arises, what we have to do in such kind of cases if we have sold some kind of equity shares or mutual funds, like that stuff. If Because nowadays everybody invest into some or the other thing. Some is investing into land or property, some are investing in equity shares, some have purchased these shares then sold them, some have invested into mutual funds. These all things are called capital assets, and if you are selling these things, then it will attract capital gain, right? So we will understand in this webinar that on such kind of things, what amount of tax percentage you have to pay, in what duration you have to pay, how it will be called as short-term capital asset or long-term capital asset. These all things will be seen in our today's webinar. So before moving forward, we'll be seeing the major takeaways from this webinar. It will be, first of all, what is capital asset, then long-term capital gain, short-term capital gain, tax treatment of loss under capital gain, and it will be followed up by Q&A session. So coming on to our introduction part, that what is capital asset? So it means generally any property which is owned by the taxpayer. Any legal rights which includes the right of control or management. It can also be considered as capital rights. Some examples are like building, if you are holding any building, or if you are having your own house, land, vehicles, patents, trademarks, machinery. These all things are called as capital assets. But some things are which are not called as capital assets are stock in trade, which is held for business or profession. Say, for example, you hold a stock which in the name of business or profession head, right? So that will not be considered as your capital asset. Say, for your business purpose, you purchased a laptop. That laptop will not be considered as your capital asset because it was held for your business or profession. Personal belongings such as wearing apparels, car, furniture, etc., which are owned by taxpayer or a family, that will also not be considered as capital asset. But the things which are considering the monetary value, some personal belongings like jewelry, archaeological collections, drawings, paintings, sculptures, and any other work of art, these all will not be considered as capital asset, and agricultural land situated in rural areas of India. Now, capital asset usually comprises of two types: short-term capital gain and short-term capital asset and long-term capital asset. Now, from that kind of capital assets, normally if you are selling that asset, then you will be attracting the short-term capital gain or long-term capital gain, right? So first of all, for that purpose, what is that short-term capital asset period? If you have hold some equity shares or mutual funds, then if you have hold that asset for below 12 months period, you have hold it, say for example, only for 8 months, and then you sold that asset, then you will be attracting short term capital gain or loss on that asset, because you hold that asset only for a span of before 12 months you sold that asset, right? So you will be attracting in short term capital gain for that. But if you have hold that asset for more than 12 months period, then you will be attracting long-term capital gain or short-term capital gain. Shares and units of equity-oriented funds normally comprises of 12 months period. If you have hold it up to 12 months, then short-term will be attracted. If you have hold it for more than 12 months, then long term will be attracted, right? Then if you have sold any kind of long term capital asset or house property, so you can plan some things like you can sell just a residential flat which was held by you for say suppose more than 2 years. For you, there will be many investment options. Like you can invest into Section 54, which talks about the investment into a residential property. Then you will be getting many kind of capital gain exemptions from that. Talking about the other long-term capital. Now, yes, you have sold the capital asset. Some are having short-term capital gain and some have long-term capital gain. So the short-term capital gain, in case you have hold the shares and securities, if a security is held for less than or equal to 1 year, as I said, for a period of 12 months if you have hold, then it will be treated as short-term capital asset. And you have to pay taxation rate at the rate of 15%. If the STD has been paid while selling those shares. But if STD has not been paid, then it will be taxable at the rate of slab rate which you are falling into. Say for example, let's take one example. There was a person, Mr. X. He was holding some equity shares for up to 12 months period only, and on that equity shares he also paid security transaction tax. STT was paid by him. Then he sold the asset within a period of 9 months from the date of purchase. As soon as he sold the asset, he he earned some amount of profit. So short-term capital gain he attracted, right? So the he attracted amount of 1,000 rupees as a short-term capital gain. On that 1,000 rupees, he will have to pay tax at the rate of 15%. But if he did not, he would have not paid the STT, then in whatever slab rate he was falling into, 20%, in that he has to pay the taxation amount. Then, capital asset, if you are having any other capital asset apart from the shares and securities, then if you are holding it for less than or equal to 3 years, then it will be treated as short-term capital asset. It will be taxable at the rate of slabs which are going on. Then talking about the long-term capital gain. Long-term capital gain, as we discussed earlier, that if you are for in case of shares and securities, if you are holding that shares and securities for more than 1 year period, and after that 1 year period you have sold that shares or securities and you earned some amount of profit, then you have to pay long-term capital gain at the rate of 10%. But up to 1 lakh long-term capital gain is exempt. If the long-term capital gain amount is more than 1 lakh rupees, then you will have to pay 10% of tax. But if STD has not been paid, then that long-term capital gain will also be taxable at the rate of 20%. Apart from shares and securities, if you are holding any other capital asset, then if you have hold it for more than 3 years period, and after that 3 years you are selling it, then you will have to pay tax at the rate of 20%. Long term tax rate will be 20%. Now, this is the chart where you will be clearly seeing that what is the tax rates of long-term capital gain and short-term capital gain. If you have sold any kind of equity shares or equity-oriented funds, equity, and that was for more than 1 year period, which means long-term capital gain, then you will have to pay tax at the rate of 10% over and above the amount of 1 lakh rupees. If you have earned more than rupees 1 lakh, then on the over above amount, you will be paying 10% of tax. If you did not sold any equity shares or equity oriented funds, apart from that you sold any kind of long term capital asset, then 20% of tax rate will be applicable for you. In case of short-term capital gain, if you have paid the STT, then 15% will be applicable. If you have not paid the STT or security transaction tax was not applicable on those kind of shares or any kind of capital asset, then you will be paying the tax at the rate of slab rates only, that amount of income will be added normally to your total income, and accordingly you will be paying the tax rates in whatever slab you will be falling into, 10%, 5%, 20%, 30%, or in the new regime tax slab rates. Now, दिस वॉज ऑल अबाउट दी गेन पार्ट। अगर आपको जितना भी गेन हुआ तो उस केस में आपको कितना टैक्स रेट्स पे करना पड़ेगा। इफ कितनों को लॉस भी होता है कैपिटल गेन करते टाइम, राइट? तो शेयर्स एंड सिक्योरिटीज और इन सब चीज़ों में लॉस होना इज वेरी नॉर्मल। नाउ द क्वेश्चन कम्स दैट कैन आई कैरी फॉरवर्ड दीज लॉसेस एज वेल इन माई नियर फ्यूचर, और मैं इन लॉसेस का कोई एग्जेम्पशन क्लेम कर सकता हूँ क्या? Can I set off these losses? These all question comes into mind as soon as we incur the loss from capital gain. What do you understand by first of all loss? Loss, it just means excess of expenses over incomes. Loss arises when income which you have earned during the financial year is less than the expenditure which you are earning. Say for example, you purchase the capital asset for 10,000 rupees, but after 1 year period, or I'm just taking this as example only. So you purchase the capital asset of rupees 10,000. That capital asset after 1 year reduced, and you sold that capital asset for 8,000 rupees. So you got 2,000 of loss. You incurred loss amount of rupees 2,000. Now you want that you have this question that this 2,000 of loss, can I set this off from my other income, or what will be the scenarios? These will be discussing now. So capital asset might be building, land, even shares and securities. If the taxpayer have sold his capital asset at more than its purchase value, he will gain from such capital asset. But if the sale proceeds of any capital asset are less than the purchase price, as I said in the example that you purchased it at 10,000 rupees, but you sold it at 8,000 rupees. So that 2,000 amount will be considered as your loss. Then it will be result in capital loss. For now, capital losses are also classified into two categories: long-term capital loss and short-term capital loss. Now, long-term capital loss. If I talk about this long-term capital loss, if you are having any loss from a long-term capital asset, then that loss can be set off from only the long-term capital gain income. It cannot be set off from any other heads of income or even from the short-term capital asset. अगर आपको लॉन्ग टर्म कैपिटल लॉस हुआ है तो आप लॉन्ग टर्म कैपिटल गेन की ही इनकम से सेट ऑफ कर सकते हो, उसके अलावा किसी भी इनकम से नहीं होगा सेट ऑफ। देन दिस कैपिटल लॉस अगर कुछ भी बचता है, then again you can carry forward it to the next financial year. This thing you can do carry forward for 8 financial years. But again, that long term will be set off from long term capital gain only, not from any other heads of income. But even after 8 years, if that loss still exists, then it will be foregone, that amount will lapse. In case of short term capital loss, if you have any short term capital loss, then that can be set off from long term capital gain as well as short term capital gain income also. But it cannot be set off from any other heads of income. Like if you have incurred short term capital loss, and you were having long term capital gain income, you were having two capital gain income from in that particular financial year. You were having long term capital gain and you incurred short term capital loss. So that short term capital loss will get set off from that long term capital gain income, from the other long term capital gain income. This is the benefit of short term capital loss. This was not in the long term. Long term would be set off from long term only, and short term can be set off from long term as well as short term. And still, if the capital loss exists, then it will be carried forward to the next financial year. It can be done for the next 8 financial years. This is all about the capital gain income, how much tax you have to pay, how these losses, if you have incurred any amount of loss, then how it can be set off or carry forward, in which manner, from which heads of income it can be set off. These all things we discussed in our today's webinar. I hope you liked our session, and if you have any doubts, I'm here to answer all your questions. Before that, if you have any question after the session also, you can write to us at support@taxbuddy.com. And for any kind of assistance, for any expert assistance, you can just download the Tax Buddies app from the Play Store, and you can just explore the site. You can take the expert assistant planning. If you need any kind of assistance from us, we'll be very happy to help you. Thank you so much. If you have any question, please go ahead. You can save this video for watching it later. Thank you so much everyone for joining. See you soon in next webinar.